Something unexpected happened with silver today. The former Blackrock manager just spilled the beans, and silver is at the center of it. The price is continuing to go up, and it's not stopping soon. And that massive $500 per ounce target might come sooner than expected. What is happening? And why did Blackrock just single-handedly change silver? Well, let me explain. Disclaimer. Former Blackrock fund manager Ed Dowd came out and said something that should make every single person sit up and pay attention. The metals are telling you that there's uncertainty out there and a lack of trust, and that gold and silver are going to be part of the new monetary system. And this isn't some random guy on the internet. This is a former Blackrock insider who managed billions of dollars telling you that silver will be part of the new monetary system. Think about what Blackrock represents. They manage over $10 trillion in assets. They have access to information and analysis that retail investors never see. When someone from that world comes out and makes a statement like this, you need to understand they're not doing it lightly. They're telling you something they've seen behind closed doors. And then Dowd dropped another bomb. Gold and silver are the trade, and not Bitcoin so much. While everyone's been obsessing over crypto, debating which altcoin is going to moon next, the people who actually know what's happening have been quietly positioning themselves in physical silver. This is the separation between retail sentiment and institutional reality. The smart money knows where to be. But you want to know why someone like Dowd is saying this? Just look at what's happening right now. Every asset is getting destroyed. Stocks are bleeding. The tech sector that everyone thought was invincible is getting hammered. Bonds are getting crushed in a way we haven't seen in decades. Crypto's all over the place with massive volatility. But gold and silver, they're absolutely ripping higher, breaking records left and right. Day after day, new all-time highs. This is what people are calling the Great Reset happening in real time. When everything falls apart, there's only one place left to go, and that's into real, tangible assets that can't be printed into existence. The divergence we're seeing is unprecedented. Usually when stocks fall, everything falls together, but not this time. Precious metals are acting as the ultimate safe haven, and silver specifically is showing incredible strength. This kind of behavior tells you that something fundamental has shifted in the markets. Investors aren't just taking risk off the table, they're actively rotating into metals because they see what's coming. What's really wild is the technical picture, and I need you to understand how rare what we're seeing actually is. Silver's RSI levels are at the same extremes we saw during the Hunt brothers situation in the late 1970s. If you know that story, you know what happened to silver prices. It went absolutely parabolic, hitting $50 an ounce back when that was real money. We're seeing those same technical extremes right now. Gold's RSI just hit 94 for the first time since 1968, right before the entire Bretton Woods system collapsed and precious metals exploded. These aren't random numbers. These are warning signs that something massive is about to happen in the financial system. The Bollinger Bands on the monthly chart are showing silver hyperextended, with gold now playing catch-up. When you see both metals moving in tandem with these kinds of extreme readings, it's highly alarming for traditional equities. History shows us that this kind of technical setup precedes major market dislocations. Something extreme is about to happen, and precious metals are leading the way, telling us exactly what's coming. And we literally just made history. Gold and silver recorded their highest daily close ever. Not just a new high, but the highest close in the entire history of these markets. But here's what most people are missing, and this is crucial for silver investors to understand. We haven't even hit the mania phase yet. That's when things go completely vertical. Every single bull market in precious metals has this final phase where the gains are absolutely insane, where moves that took months suddenly happen in days. We're just entering it now. The explosive part, the part where generational wealth gets created, that's still ahead of us. So naturally everyone's asking, where's this actually going? James Turk, absolute legend in the precious metals space, who's been doing this for decades, just put out his updated numbers. Silver's fair value, according to his calculations, it's $567 per ounce at a 20-to-1 gold-silver ratio. And that's just fair value based on historical relationships and current monetary conditions. But in bull markets, prices don't stop at fair value. They overshoot it. And sometimes, massively. We could be looking at silver going way beyond that number before this is over. Turk's track record speaks for itself. He's not some permabull who's always calling for higher prices regardless of the data. He's a serious analyst who's been right on major moves throughout his career. When he puts out a number like $567, it's based on rigorous analysis of monetary aggregates, historical ratios, and supply-demand fundamentals. In his statement that metals are likely to overshoot fair value at the peak, that's not speculation. That's pattern recognition from studying every major metals bull market in modern history. I know what you're thinking right now. Okay, but will silver actually punch through $100 or will it stall out? Here's the reality, and this is important for managing your expectations. We might see some consolidation just below that 3-digit mark because there are sellers there. People who bought at $30 last year are sitting on triple baggers, and some will take profits. That's completely normal human behavior. When you've made 3 times your money in a year, the temptation to lock in gains is strong. But nothing has changed fundamentally. Silver is still massively undervalued relative to gold, relative to its historical purchasing power, relative to the amount of currency that's been printed. We're in a long-term supply deficit that's getting worse every single year as mines deplete and new discoveries dry up. EV battery demand hasn't even hit yet. We're talking about a massive wave of industrial demand that's just starting to come online. And China is in a full-blown strategic metals war with the US, stockpiling silver as a strategic resource. Once silver breaks through $100 convincingly, once it takes out that psychological resistance and shorts get squeezed, that's when the real move starts. That's when we could see $150, $200, even higher in a matter of months. The consolidation phase, if it happens, is actually a gift for investors. It gives you time to add to positions before the next leg up. It shakes out weak hands and builds a stronger base for the move higher. Every major bull market has these consolidation periods, and they're always followed by even more explosive moves. Speaking of China, they're doing something that should terrify anyone holding dollars. They just completed their 14th straight month of gold purchases. 14 consecutive months. Not because gold is cheap, they're buying at all-time highs. They're buying because price doesn't matter when you're building a strategic reserve. They're buying because they're constructing a system that doesn't need US dollars. The numbers are staggering. They're adding 30 to 40,000 ounces monthly, and that's just what they're officially reporting. The real story is even bigger. Estimates put China's true gold holdings at 5,400 tons versus the 2,300 tons officially reported. They're deliberately understating their reserves because they don't want to tip their hand. They launched mBridge with the UAE back in November, a digital currency platform that lets countries trade without touching US dollars. This isn't theoretical. This is infrastructure being built right now to bypass the dollar system entirely. And they're dumping treasuries to do it. China is actively selling US debt on a massive scale and converting it into gold. Think about what that means. The largest foreign holder of US treasuries is exiting their position and buying precious metals instead. That's not a vote of confidence in the dollar. That's a vote of no confidence. And where gold goes, silver follows, with even bigger percentage moves because of silver's smaller market size. Poland just approved buying 150 tons of gold, moving them into the top 10 globally. This isn't just China. This is a global central bank movement away from dollars and into hard assets. Poland is looking to lift their reserves towards 700 tons to reinforce long-term monetary strength. Central banks worldwide are quietly abandoning the dollar system, and when central banks do this, they're not speculating. They're not trying to make a quick profit. They're protecting their nations from what they see coming. They have access to information we don't have, and they're all moving in the same direction. This is creating incredible chaos in the global system. The US just slapped tariffs on 8 NATO allies over Greenland. They are all facing 10% tariffs starting February 1st, rising to 25% by June. The demand? Complete and total purchase of Greenland. This is the US threatening its closest military allies with economic warfare over an Arctic island. Think about how insane that is. These are countries we've been allied with for 75 years, and we're threatening them with tariffs. France is threatening 93 billion euros in retaliation. They're pushing the EU to deploy what they call the anti-coercion instrument, which means massive retaliatory tariffs on US goods. This isn't just talk. This is the breakdown of transatlantic alliances happening in real time. Gold jumped 10% in just the first 3 weeks of January alone because of this chaos. When major global alliances fracture, when trust breaks down between countries that have been partners for generations, money floods into safe havens. And it gets worse. There's a criminal investigation into Jerome Powell over renovation costs. On the surface, that sounds bureaucratic and boring, but it's actually terrifying. Powell responded publicly, and this is crucial. The threat of criminal charges is a consequence of the Federal Reserve setting interest rates based on our best assessment of what will serve the public, rather than following the preferences of the president. Read that again. The Fed chairman is publicly stating he's being criminally investigated for not doing what the president wants on interest rates. Treasury Secretary Bessent went on Meet the Press defending the investigation. The president called Powell that jerk and said he'd be gone soon. Powell is attending Supreme Court arguments to defend whether the president can fire Fed officials. Markets are now pricing in the possibility that Fed independence ends this year. When central banks lose independence, currencies lose credibility. It's that simple. If the market believes the Fed is just taking orders from whoever's in the White House, the dollar's status as the global reserve currency is over. And when that happens, money floods into real assets that can't be politically manipulated. Here's how you know this is getting serious on the ground level. Look at physical silver prices around the world right now. In the US, silver is at $94. In China, it's $102. In India, people are paying $113. That's a 20% premium over US prices. This isn't some minor arbitrage opportunity. This is a massive price dislocation that tells you physical demand is overwhelming available supply in certain regions. When premiums explode like this across different countries, it means people are desperate to get actual metal in their hands. They're willing to pay significantly more because they can't find supply at spot prices. This kind of premium structure typically shows up right before the spot price explodes higher. The physical market is leading the paper market, telling us where prices are actually headed. In India, which is one of the largest silver markets in the world, 20% premiums are screaming that there isn't enough metal to meet demand. That shortage eventually forces the paper price higher as physical demand overwhelms the futures market. Meanwhile, gold is closing in on $5,000 and the moves are accelerating. It hit another record high overnight. Fund managers are warning that the Sell America trade is back in full force. Stocks, bonds, and the dollar all falling at the same time. Usually you get a flight to quality where money moves from stocks into bonds or bonds into dollars. But now everything denominated in dollars is falling together. That's only happened a few times in history, and it's always preceded major currency crises. The whole Greenland situation has EU leaders panicking. Canada's Prime Minister, Mark Carney, delivered a pointed speech warning of a shift in international relations. ECB President Christine Lagarde warned of changes to the global order. These aren't minor political figures making vague statements. These are the heads of major central banks and governments saying publicly that the world order is changing. Policy uncertainty is off the charts. When you have this level of geopolitical chaos combined with currency concerns, precious metals become the only safe haven. JP Morgan is calling for 5,000 gold by Q4 2026. Goldman says just a 1% shift from the $27 trillion treasury market into gold pushes prices past 5,000. And here's what matters for us as silver investors. When gold makes moves like this, silver outperforms by massive margins. We're talking 3, 4, sometimes 5 times the percentage gains. This is why that comment from Ed Dowd hits so different now that you see the full picture. He's watching the same thing we are. The financial system is being restructured in real time. The dollar's dominance is cracking after 80 years of being the global reserve currency. Central banks are scrambling out of treasuries into gold at a pace we've never seen before. Alliances that have existed since World War II are fracturing over trade disputes. The Fed's independence is under direct attack for the first time since its creation. Physical premiums are at 20% in major markets, showing desperate demand for actual metal. Technical indicators are flashing the same signals we saw before the biggest precious metals moves in history. Dowd isn't making a price prediction. He's making an observation about the fundamental restructuring of the global monetary system. When he says silver will be part of the new monetary system, he's telling you that what we think of as money is changing. The dollar era is ending and something new is being built. Silver, because of its monetary history and its industrial applications, sits right at the intersection of that change. This isn't about making a quick trade. This isn't about trying to time a bounce. We're in the early stages of something that happens maybe once or twice in your lifetime. The last time we saw anything comparable was the 1970s, and silver went from $1.5 to $50. That's a 33 times move. If we see anything similar from current levels, we're talking about silver going to thousands of dollars per ounce. Does that sound insane? Maybe. But it's exactly what the fundamentals suggest when you factor in decades of currency debasement, supply deficits, and surging industrial demand. When someone who managed billions at Blackrock tells you silver will be part of the new monetary system, when physical premiums are exploding globally, when central banks are buying with both hands regardless of price, when the technical setup matches the greatest bull runs in history, you don't ignore it. You don't wait for confirmation. You don't wait for silver to hit $200 before you believe it. By then, it's too late to build a meaningful position. The question isn't if silver goes higher. The question is how high and how fast. We've got the technical setup showing extremes not seen since the Hunt brothers era. We've got the supply deficit getting worse every year as mines deplete faster than new ones come online. We've got industrial demand about to explode from EVs and solar, with battery manufacturers scrambling to secure supply. We've got the monetary reset happening with central banks abandoning dollars. We've got central banks accumulating precious metals at record pace, regardless of price. We've got complete geopolitical chaos with trade wars and alliance breakdowns. Silver at $200 in the next year or two isn't crazy. It's conservative based on historical patterns. And if Turk's right about that $567 fair value, which is based on sound monetary analysis and historical ratios, and we overshoot like metals always do at bull market peaks when the mania phase hits, then 500 plus silver isn't just possible. It's probable. It's what the math suggests. It's what history suggests. It's what the fundamentals demand. Everything is lining up in a way that rarely happens. The smart money is already positioned. They're not waiting for confirmation. They're not waiting for silver to prove itself. They're accumulating now, while retail is still skeptical. Former Blackrock insiders are publicly saying silver is the future of the monetary system. The technical picture is identical to the best precious metals runs in history, with RSI levels and Bollinger Bands showing the same extremes that preceded the biggest moves. Physical demand is so intense prices vary 20% globally, showing desperate shortages in major markets. Central banks are accumulating at record pace, buying at all-time highs because they understand price doesn't matter when you're protecting national wealth. And the mania phase that multiplies everything by 10 hasn't even started. We're still in the phase where informed investors are building positions. The phase where everyone knows about it and is trying to get in, that's still ahead. The phase where silver's on the news every night and everyone's talking about it at dinner parties, still ahead. The phase where prices gap up every single day and gains that took months start happening in hours, still ahead. This is the opportunity. The fundamentals are rock solid with structural supply deficits that can't be fixed quickly. The technical picture is screaming with the clearest signals you could ask for. The monetary system is being restructured, and silver is going to be central to it because of its dual role as both money and industrial metal. Global chaos is driving unprecedented safe haven demand as trust breaks down in currencies and governments. The Great Reset is happening whether you believe in it or not. The monetary system is changing whether you're ready or not. Silver is going to be at the center of it all because it's one of the few assets that can't be printed, can't be digitally created, and has both monetary and industrial value. For those positioned correctly in physical silver right now, the wealth creation opportunity is absolutely historic. This is generational wealth being created for those who understand what's happening and have the courage to act on it. But what is your opinion on this? Comment down below. If you are curious to find more, then make sure to click on one of the videos you see on the screen. And with that, we come to the end of this video. If you enjoyed the video, then turn on the notifications bell on this channel. Missing an important silver update might make you lose money, so don't risk it. Also, please share this video with as many people as possible. Let's get this news out there.